Hey everyone, welcome back to the channel. In this video, we're going to be discussing HEX, the calm before the storm. If you like this kind of quantitative technical hybrid analysis on the HEX price, leave a thumbs up. Be subscribed to the channel by the end of the video if you aren't already. And let's go ahead and talk about this calm before the storm. What am I talking about, right? So if you look at the HEX price, you notice that we have a clear bullish formation. Now, again, for the longest time, we looked at this falling parallel channel as a bull flag. And not only do we respect it really nicely, but we actually broke above it and then held support on the top of the flag. And then we had a nice little bounce from there, about 4.4 cents, up to the 6 penny region or so approximately. And if you zoom out a little bit, you can see clearly why I drew what I drew, because this could be a bull flag, right? Where on a longer time frame, when you zoom out, instead of just having this falling parallel channel, which we had prior, having something more like this, where you have a consolidation pattern, a wedge forming. And I forget what you call this. I don't think it's a symmetrical triangle, because it's not symmetrical, but rather it's a wedge, right? It's a wedge. Where, I mean, you could even argue that it's an ascending triangle, right? Depending on this level right here, because it didn't quite reach it with the wick, but if you just look at the candles, then you could actually argue for this to be something more like this, right? Like an ascending triangle that could break to the upside potentially mid-June at the latest. But yeah, without getting too much into that, we have a potential bull flag, right? And not only that, but we have this nice consolidation going on, hence the calm. And we have support on this ribbon, which again, it's just your 20-day simple moving average and your 21-day exponential moving average. The 20-day, let's look at the history, right? Let's look at the history of the 20-day moving average for HEX, this ribbon, the 20 and the 21. And that's why I have this chart over here. After a downtrend, we formed back here a little bounce, consolidation around this ribbon before blast off. Once we had our local peak and came down and broke through it and then started holding this ribbon as resistance over here, right? Then we had a nice little reaccumulation, consolidation, capitulation. Boom. Once we got back above it, we more or less pumped above it, came back to hold it as support, and then we went back to our recent all-time highs. Even though this consolidation region over here didn't exactly touch it, I think it's fair to say, like, check it out, this is what I'm talking about. Zoom in. I think it's fair to say that we held it as support, right? Because even though we didn't touch it to the exact decimal, you could argue this whole region over here is more or less support. Excuse my ugly circles. But I just want to give you a history of what testing the 20-day, 21-day moving average, exponential moving average ribbon means in the context of price. All right, then we got far extended up above it for a while, approximately a month. When we came back down, again, we broke through it quite decisively, like over here. Then we came back with our bounce to test it as resistance, wicked a little above it. But for the most part, we had a similar, I guess, fractal to over here, where it was more or less dip, consolidation to previous region, slightly lower, super similar, right? And then we didn't have obviously our capitulation like we did over here, or to the degree that we had it over there, but more or less it was a downtrend. And here you had kind of like a little what is this? Like because this whole thing was consolidation, right? So this pump always throws me off, but let's count it because it's the data. We pumped above it, so similar to over here, consolidated above the ribbon before moving up a little bit more. And then once again, so you see this pattern playing out. When we consolidate around it, goes sideways after downtrend, it pumps usually, right? And then after we have a huge run up, and then decisively break it and hold it as resistance, that's when we generally see consolidation or capitulation, reaccumulation. So once again, broke through it, waterfall, testing it as resistance. So whenever you test it as resistance, we formed our bottom over here. And then once again, we had our bullish formation pop up above it, consolidation around it, before a very nice move up, before we saw what happened again for like the third, fourth, fifth time. I don't even know how many times so far. Dip, decisive dip. That's important. A decisive dip beneath it. Resistance, waterfall, reaccumulation, capitulation, all that good stuff. Break above it. And this is probably getting old, right? Let's go a little faster. We break above it, consolidate around it, move up, have a local top, break beneath it decisively, hold it as a resistance, reaccumulation, and then once again, this was kind of like a fake out over here, unless you consider, you know, like a little 50% pump you could have gotten, but let's count it because it's data. It did move up, decisive break beneath it, great reaccumulation zone, break above it, decisive break above it, move up, break beneath it, resistance, reaccumulation, break above it, and now we're testing it as support, right? So, so many data points. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I counted that kind of fast. I think it's 15. 15 data points. That's a good amount, you know? Again, none of this is financial advice, but I just want to show you what's happened historically. Because this is where we are now, and we formed a bullish formation, moved up above it, and now we're consolidating around it. And what usually happens after something like this is a storm, hence the calm before the storm. So if you've noticed, we've had a few times where we've had a nice break above it, consolidation, blast off. Over here, break above it, a bullish formation holding support, which is, I think that's key here, because for example, this break above it over here, sure it was a break above it, but we didn't form any really nice bullish structure. Whereas here, you know, we were holding support on previous all-time highs twice. Bullish structure, in my opinion. Again, this is discretionary. But even over here, you had this kind of nice, funky looking bull flag. We had a move up. We had about a 2x move up, which isn't bad. It's nothing compared to previous moves we've had. But nonetheless, it was, you know, it was nice. It was nice. Over here, again, a perfect example over here. A very textbook ascending triangle formation above this ribbon. Holy shit. We had blast off. I think it was like a, you know, if you had played that formation, that move, you could be looking at a 3 to 4x, which is not bad. Again, over here. Nice bullish formation above it. Just a nice flag before a higher move up. I think those are the major examples I can show you. Yeah, truly. I don't think there are much better examples. The other ones would be a reach. I think I'd be reaching if I try to show more examples. But this is where we are now. And I think it's the calm before the storm, like I was saying, because you have a nice move up, bullish structure above this ribbon, blast off. And I think the most prime example, the best examples, I'm actually going to label, let's say pink, were this one. Very clear, large bullish formation, you know, much bigger than this one, before a nice 10x move up. Again, over here, I'll label it pink just to distinguish the more intense, explosive versions of this fractal that I'm talking about. It's played out multiple times on the daily time frame on this ribbon. You see, again, a nice big break up, and you could argue like, okay, this was a 2x pull. What was this over here? You could argue this was like a 3, 4x pull. So like the size of the move itself, in my opinion, looking at these charts, not really my opinion, just looking at these charts, the bigger the break and structure above it, the better. All right, like this one was kind of nice too. We had a nice, 2x pull, a nice flag, and then a nice move up. And so we've seen moves like a 10x move up. We've seen moves like, depending on where you could have played this, 4, 5x move up. 10x, 4, 5x over here. It was, again, approximately a 4x. So where we are now, I'd consider to be a pink, based on how we're kind of color coding this, where we had a huge pull of approximately 4 5x, actually 5x in size, and now we're forming this nice bull flag above these moving averages, above this ribbon. And so I think this is the calm before the storm, where you see something like this over here. Nice bullish formation before blast off. Very nice bullish formation before blast off. Very nice bullish formation. You guessed it, before blast off. And not only that, when is this gonna break, right? Because we can draw our nice little wedges, but at the end of the day, like, when the hell is this thing gonna break? Well, I can't tell you. I have no clue. I think the longer we hold support on this ribbon, maybe the more explosive the move is. I can't tell you for sure. All I know is that our regression models are moving up every single day, so the longer we wait before an explosive move up, assuming those models hold any validity, we'd be seeing higher prices. So patience kind of pays off here, if that makes sense. And I guess I'll share with you guys a little sneak peek of this dashboard that I'm working on. So I'll just show it to you guys here in this video. Check it out. Daily volatility. I think this is a really cool, insightful chart to look at. Let's actually make it a little bit bigger and show you guys what I'm talking about. So I'm talking mainly about this daily volatility over here. All right, can you guys see that? Yeah, you can see that. Okay, so I'm talking about this daily volatility. Let's make it even bigger. I really want to drive this home. And I've talked about this in one video. I've only talked about this in one video in the past. It didn't do so well, but you know what? Some of these videos that don't do that well, they still hold insight, right? Just because it's not hype, like realistic price predictions, $7, $10, $20. Like, that video absolutely crushed. I think it's my most viewed crypto video, HEX video so far. So it's like 2K views. Really cool stuff. I'm glad you guys enjoy the moon math. Like I was saying, I went full moon boy on that one. So check that out if you haven't already. But these more kind of boring videos, I mean, there could be an argument there for giving those at least the same amount of validity, if not a little more, the more boring ones, where not many people are looking at them, right? So this daily volatility, I don't think many people are looking at, and it essentially takes a price spread on any given day from the high to the low. So when we look at our regular charts, we're taking data off the average of price. So on any given day, you have your open, you have your high, your low, and your close. And on any given day, for my data, I'm taking the average of those 4 data points to give you kind of a average price for the day. And so it'll never include hourly wicks, but rather it'll be more like daily candle data, if that makes sense. However, on this chart, we have our actual high and low. So not the average. The average would be somewhere in between. And this gives you an idea of what the spread on any given day is. So what I mean by spread is if on one day, the high and the low have a huge difference, like a lot of volatility that day, and that was a very volatile day, right? That's pretty common sense. Whereas if the high and the low were like really next to each other, then you know it's probably a day where you're consolidating. And so your what I'm calling here, your normalized intraday price spread. So your normalized daily volatility is going to look something like this. And it's normalized because I actually divide that difference by the average price. Because as price increases over time, the differences are just going to increase naturally. And so it'll kind of skew the data to look as if things are getting more volatile over time. So to kind of fix that, because you want it to represent more so volatility on that given day, then the price difference divided by the average price gives you a better normalized understanding of what's actually going on, right? And so this scaling of this yellow chop will persist more over time. If that makes sense. I hope that makes sense. But this is what we have so far. And you notice the volatility is actually decreasing a lot. Volatility is decreasing a lot. And you can probably tell just by looking at the charts, right, that the given daily volatility, so the size of the candles, kind of getting a little smaller recently. The sideways action is really contributing to this sort of downtrend on the volatility, which we've seen historically whenever we have, you know what, let's actually do this. Let's check out certain points in time. Like let's look at over here, right? What was happening to volatility when we were chopping around over here before our explosive move up? And actually didn't do this before the video, right? So over here, it was actually quite volatile. I'm not gonna lie. a lot of spikes, and then a nice move up. Right. Interesting. Okay, let's look at a different one. Over here, this ascending triangle, that's a great example. What was happening over there? Okay, this is a better example. This ascending triangle over here, we had our volatility decrease, and it got pretty low, started spiking up a little bit, started coming alive around here, day 300 or so, before we actually started seeing some volatility to the upside. So this might be a good example. And let's look at maybe one or two more. This move here after big payday, let's look at that. After big payday, again, volatility was pretty low down here before we had our explosive move up. So I think this is a good sign, and that's why I'm calling this video the calm before the storm, because volatility is decreasing. That generally means a move is incoming, whether it's to the upside, to the downside, the direction of that, which can be inferred from other context clues, which we've been looking at for the entirety of this video, such as our 20-day 21 EMA ribbon and these bullish formations, sort of a slightly more detailed analysis on the actual history of the chart. So let me know what you guys think. Is this preparing for an explosive move to the upside? If so, what are your targets, right? Are they something along the lines of our 10 cents or our 20 cent target, which we've talked about? Are they more bullish? Do you think we're going to blast right through 10, 20 cents? Are you bearish? Like, do you think this is going to, I don't know what your case would be, but do you think this is going to play out differently? I'd love to hear your thoughts. Let me know. With that said, I will be signing off right now. Leave a thumbs up if you enjoyed the video. Be subscribed definitely by now if you aren't already. I appreciate you watching. Turn on the bell because we drop videos every single day, so don't miss out. And yeah, I'll catch you in the next video. Peace.